Don't start a business. Buy one. At least that's what everyone's saying. And I get it. The boring business wave is very, very real. It's very, very powerful. But like every wave, there's a sweet spot that only a few find that gives them the best ride. And I think that's why you actually want to start this business instead. So you've heard about the 4.5 million small businesses that are owned by baby boomers that are coming to market over the next decade. And it seems like that's all anyone's talking about is how to buy what the boomers are selling.
Today, we're going to walk you through the businesses that you can have up and running in 90 days that let you sit right in the middle of this transfer without buying a single boring baby boomer business.
The boring business wave is obviously very real. It's very viral. So many people are jumping on it.
Yeah.
I'm not trying to argue that at all. I mean, yeah, buy a laundromat, buy a car wash, buy an HVAC company, right? This whole movement, it makes a lot of sense. And there are a lot of people out there that are actually doing it really well. But I've also seen something that's kind of quietly happening behind the scenes that nobody's really talking about yet. And I have a friend, you know him. He actually wrote the best-selling book on buying boring businesses. And he built this whole community around it, and thousands of people joined that community. I think he helped people buy well over $1 billion of, baby boomer businesses. And then just recently, like last year, he sold the majority ownership of that to another business, merged. And guess what he's doing now? He launched a private equity fund business where he's raising capital for private real estate deals, for other private alternatives, private credit, even some private equity deals that he's involved in. And you know who his investors are? It's all those boomers that he helped other people buy their businesses, and now they got all this cash. They need somewhere to put it. And then it's all of those business owners now that bought those businesses that have cash flow and more money than they had before. And they need somewhere to park that money as well. And so it was, it was a very systematic play that he ran where it's, hey, I can build a whole community about helping people do the thing that feels like sexy right now, right? I hear a lot of people say boring is the new sexy, right?
Until you got to punch the toilets and do the electrical.
Until you actually have to do the work, 100%. And so, but this guy, I mean, he raised $50 million in private capital last year and probably made a lot more money
from a lot of those folks.
Than he ever made helping them buy the businesses. And so I think that's the play. I think that's the bigger play.
Yeah, and I think a lot of these business owners, I mean, they spend decades building a business and then they exit it, and what are they going to do with that money?
Absolutely.
And I think a lot of business owners too, like they haven't maybe saved for retirement in traditional ways, a lot of them. If they're entrepreneurial or if they're business, founders, a lot of their equity is in their business. I think a lot of these people, I mean, I've even talked to people that, are in their 70s that so much of their net worth and their equity is in that business.
Absolutely.
And that's what's paying them, and that is their retirement.
Right.
So when they exit that, they're like, all right, what do I do with these proceeds now to maintain my lifestyle?
Yeah, they don't. They feel stuck in a lot of ways because they don't know how to replace it. So I think, what do you think? I mean, buying boring business is a niche opportunity, but don't you think it feels like it's gotten a lot more competitive and a lot more difficult to pull off?
Yeah, I think it's more competitive, and I mean, that's just what makes it more difficult. I think there is very good financing options, with SBA loans and stuff like that. There's seller financing, there's stuff like that. You're able to kind of take over, but it's just never that easy, though.
Right.
And also with competition, like you said, that's what makes it. That's what makes it difficult. I think.
Yeah.
It's just the awareness of like, oh wow, I can go buy an existing business. People know about that more.
Sure.
And they know that it's like easy to do.
Yeah.
But because so many people are flooding in to do that, then it makes it more challenging. And then you're overpaying. And it's like, you might as well just start a business.
Right.
Sometimes.
Absolutely. And it's become very competitive. I know people who, 4 or 5 years ago, seller financing was the thing that everyone was teaching. And now it just gets more and more difficult because you're not just competing with another, everyday average dude that wants to buy a laundromat. You're competing with private equity firms with tons of capital that are wanting to come in and roll these things up, and sell them off because they see the wave.
Yeah, we just had somebody on the podcast recently that was doing that, where they were pulling multiple businesses together.
Yeah.
How do you compete with that if you're just a regular person who's wanting to just buy a business that you can own and operate? It's difficult, right?
It's very difficult, yeah. So I think the better play, if folks really want to kind of tap into the silver tsunami, the greatest wealth transfer in history, it's a $15 trillion, transfer of wealth from baby boomers to whoever's going to catch it, the next generation of business equity. And that's $15 trillion of transactions, of cash, of money that's going to change hands. And so that money's going to have somewhere to go and somewhere to land, both on the baby boomer side as they sell their business, which we already alluded to. But then there's the other side of that. These new business owners are going to buy cash flowing businesses. That's the whole goal. And now they're cash flowing. They're building up capital. They're not going to necessarily want to go out and buy 10 of these and keep doing the same play. I mean, at a certain point,
not everybody wants to do that. That's the minority.
Well, your ability to actively own and operate businesses. And I know everyone says, oh, well, I'll just buy it and I'll hire someone to run it and all that kind of stuff. And if you're saying that, then chances are you've never actually tried to do it, because that's a whole lot freaking harder than most people, try to make it out to be. Just hire someone to run it.
Most people are not wanting or have the skill set to scale like that with everything that goes into it. But I think kind of what you said about these people that are buying the businesses that have cash flow, they a lot of them, it's like they don't want to just buy another plumbing business.
Of course.
They want to put that money into something else.
Yeah.
That's diversified, that is hopefully passive.
Yeah.
Where they're not having to do twice as much work. They can just work on their business.
Yeah, I think it comes down to the right wealth building strategy, that the four quadrants, the four cash flow quadrants that Robert Kiyosaki talks about in his book, right? You've got, you have a job, you're an employee. Self-employed is you own a job. You still have to sell your time, but you're in control of it. You own a business, now you own a system that generates money. That's what people are buying, is quadrant number 3, which is awesome. A system and an infrastructure that someone else built that you can just take in, maybe operate it as is or improve some of the operation. Make it more efficient, modernize it. But then really the way that you get to actual financial freedom in any strategies, you have to eventually graduate into that investor quadrant, which is quadrant 4, which is where your money is actually working for you now. You're not actively working for your money. And so that's the two sides of it, is the boomers on one side, the guy who's owned the business for 30 years, he sells it, he's got $2 million. He doesn't just want to take that money to a financial advisor and, make $80,000 a year off of it in some annuity or something like that. Like that'd be the least amount of money he's made in the last 30 years, right? But at the same time, he doesn't know where to go to invest with people who think like he did, who build the way that he built. And so it's hard. It's like a lot of those, people, when they sell their businesses, it's really hard for them to figure out what to do next. And I think that's the opportunity, is the greatest entrepreneurial play is to find what's the biggest problem that's being created. I think that's one of the biggest problems that my buddy that I mentioned that wrote the book on buying, boring businesses. That's the problem he's solving. He's solving a problem by saying, well, I'm going to take all the expertise that I have in operations and looking at different businesses and all that kind of stuff, and all of the credibility that I've built with all of you people, and I'm going to put together private funds that invest in fractional ownership of other businesses, of real estate, of private credit, of private oil and gas ventures, even like crazy private equity deals that'll like 20x people's money. Or it's kind of like swing for the fences, though, right? Like it's either going to 20x or you're going to lose all of it, kind of deal. But it's a phenomenal business model, and he's obviously proved that it works. He raised $50 million into his funds just last year.
Well, yeah, and from that trust that's there, right?
Yeah,
and from realizing, like, even by buying and selling boring businesses, it's funny that we call them that.
Yeah,
but they are boring. They're just blue collar. They're
laundromats, plumbing companies, paving companies.
But exactly. You kind of want your business to be boring.
Yeah,
because that means it's just working.
Yeah,
but I guess my point was, like, by buying and selling boring businesses, you almost uncover that deeper need like which, as you said, is the $15 trillion of wealth that's transferring hands that isn't just going into it's actually coming out of those businesses.
Yeah, and it needs somewhere to go.
To go somewhere.
It needs somewhere to go. And, and I think the ideal is that most of those people want that equity to go back into stuff that makes sense to them. Mm-hmm. That's why I like real estate, because almost all of these guys understand real estate. They like real estate. They see the value of real estate. We have an investor that we're working with right now that, he's owned an apartment complex for 30 years. Mm-hmm. He's owned a lot of real estate. He has his own real estate business, and now he's in his 70s, and he's like, I don't want to do this anymore. Like, I don't want to actively manage this and then, get another freaking insurance increase. And now I've got to spend 2 weeks going back and forth to different insurance brokers trying to get the insurance down. And
plus he had a fire.
So like half of his apartment complex burned down.
He had a rough year.
Yeah, really rough year. And and he's, got an aging wife as well, who her health is struggling. And like he's in a tough spot, and he felt very, very trapped. Like, I don't know what to do. Yeah. If I sell this outright, then I don't have the income that I spent my whole life building. We're basically helping him. He came to us because he's like, I don't want to just take this, $2 or $3 million of equity that I have from this apartment complex and roll it into, some financial advisor managed thing that gets me 4 or 5% a year, and now I'm making half of what I'm, what I need to live off of. I want to invest that money with people who think like I do, build like I do, and produce the kind of results that I was able to produce. And that's exactly why he came to us.
He came to us,
asking us to help him solve this.
He can live vicariously through a younger operator. In an industry that he understands. And he does have money in the public markets, few million. But he's not going to just put it all there. He's going to, is what he told me.
Of course.
I said, hey, what do you want to do? And he said, well, I definitely want to continue. I want to exit that and go into more real estate.
Yeah, absolutely. So he's smart, wants to diversify.
With someone else doing the work.
But it's very easy for a lot of financial advisors and stuff like that to approach this generation of people who are exiting their business and say, oh, let's just put it in like fixed income annuities or whatever it is. And maybe that's a portion of it. Maybe that's part of the solution. It's like, okay, let's protect, but that's not like you don't retire from being an entrepreneur. You just retire from active involvement. I think, when you think like an entrepreneur and you've built your entire career and all the success that you've had on thinking like an entrepreneur and being an entrepreneur, when it comes to investing, you want to invest like an entrepreneur. And entrepreneurs, of all of the things that, that we're wild and crazy and risk takers and all that kind of stuff, at the end of the day, we like for things to be boiled down to simple. When I think about investing, I think about it like a business, right? 3 things that I think about. One is, how do we generate revenue? And if I'm investing in this, is there a plan to increase that revenue? The second thing is, what are the expenses? How much does it cost to run the thing? And what's the plan to reduce those expenses? And then thing number 3 is, who are the people that are responsible for executing the plan for 1 and 2? And that really is as simple as it is.
Yeah.
If you invest, especially on the private alternative side, if you invest with those 3 filters and you get really good, clear answers on those 3 filters, you can invest. And that's the entrepreneur, that's kind of the anchor of the entrepreneur investor framework. Is if you built a business, you want to invest in something that you understand, right? And that's the distilled, most simplified version of what you understand. You understand revenue, you understand expenses, and you understand people.
Yeah, and connecting with those, it's personal.
Yeah.
Whereas when you go into just a public markets or something that's, it's outside of your control.
Yeah.
And you've kind of lost. I think there's a lot of business owners that have had so much control, they're used to that.
Yep.
That they do want to relinquish some of that and have passive income, but they still want to have a little bit more maybe visibility or awareness of like what's going on.
Right.
Like this guy we were talking about, our investor, he doesn't want to do the work, but he still wants to like be able to see that his equity is in another another project
Yeah.
that he could drive by and it's right over there and he's not doing the work, but he's more comfortable with that.
Yeah.
And like a lot of these business operators, I think a lot of them are very hands-on. They've built, smaller, boring businesses themselves and they're wired that way.
Yeah.
I think a lot of them.
Absolutely. And so, kind of back to the play that we like, that we're running, and that we've got a whole community of people that are running. We're giving them the playbook. They're running it. A couple dozen people that are having massive success with running this play is launching your own investment fund, aggregating or raising capital from those people, those business owners, those entrepreneurs, or honestly anyone in your network that thinks in a more simple way about investing, is burnt out by stock market volatility, doesn't just want to go trust a financial advisor and make 4 or 5% a year. They really want to invest for growth and legacy wealth and in, private tangible assets and things like that really make sense, whether that's businesses or real estate, which we focus a lot on, or oil and gas, which we do some of as well, or private credit, which we also do some of as well, whatever it is. And so it feels like a complicated thing, the idea of launching a fund and becoming a fund manager, but it's really a lot more simple than that.
It's people.
It's people, and it's creating an entity and having the correct compliance framework. So you always work with, a securities attorney to put it all together. But once you have it all together, it's really, just think about it like it's just a pool. It's just a place where you give people the opportunity to contribute capital collectively. And then because you have collective capital, the power of collective capital is that it's bigger than individual capital. There's usually more of it when you pull it all together, right? That's very, very simple. And so when you're going into these opportunities and these deals, you're easily able to negotiate better investment terms, better splits, better preferred returns, better ownership splits, right? So then you go in, instead of going in with your $100,000 investment, you're going in with $2 million, and you get a better deal on that. And as the fund manager, you get to reap the benefit of that margin of that better deal, right? And so just for aggregating the capital, you might make 15 to 20 to even 25% of just the capital that you aggregated on that deal. So if you raise $1 million on a deal, you might make $250,000, not off your own money, but just off of aggregating that capital, launching the fund. And it's really not that hard to do. And in order to do it, you really only need 3 things, right? You need to be in the right rooms, have the right network, right? Both on the investor side, but also on the operator side. Have access to quality operators who are doing good deals, whether that's in private equity or real estate or whatever it is. You need to have access to those kinds of people and know how to vet them, know how to build that. And if you're an entrepreneur, you already have an advantage in that because you understand core value drivers. And then the last thing that you need is a framework for trust and credibility in this, where you can help those investors understand, you can communicate a clear investment thesis and approach. And we've packaged basically all of those things that you need into our Multiplier University community. And so inside of our Multiplier University community, we've got, right now about 50 people that are, actively running this strategy. And a lot of them having tremendous success. We got one guy, Rod. I actually talked to him on the phone 2 days ago. His first year, which was his first full year, which wasn't last year's, year before, working with us, running this fund strategy. He came down to hear me speak at a private equity event in Phoenix. You remember down in Phoenix last February? We're sitting down to have dinner that night, and he's like, I was doing this to build the long-term legacy wealth engine. He's like, my income from my business was fine. It was sustaining me. It was more than enough. I was just looking at this strategy as a way to kind of supercharge my investment portfolio. And he's like, I was getting all of my tax stuff together to get to my CPA. And I realized I made over $200,000 last year in fees and cash flow just on doing this. He's like, it was crazy. And that's not
and it was very part-time.
Oh, very part-time. I think he was, I think he said he worked in the 6 weeks that he was actively raising for one of his funds. He said there wasn't a single week where he worked more than 3 or 4 hours on it.
Yeah, and just so if people don't know what a fund is,
Yeah.
What you're saying is it's basically just gathering, and one option would be these baby boomers who are exiting because there's a ton of them. So that could be one pool to pull from.
Yeah.
Bring that capital together into a fund and then go into another deal.
Yeah.
By another operator, which I know what a fund is, but just for
it's just a legal structure. It's just an entity, like an LLC. Typically, it is an LLC
where there's a bunch of investors that go in. One person is designated as the manager, who gets some fees for doing that, but then goes into a real estate asset or some alternative investment.
Yep.
And the money flows out of that into the fund, and it gets divided up.
Everybody in that fund gets better returns on the deal that they're investing in because of the power of collective capital.
Yeah.
That's really
they can negotiate a better split.
Absolutely.
Better cash flow, better upside because they're coming in with that larger check.
Yeah. Well, you imagine, I mean, you look at like if you were just raising capital for your business, you own a business, you're raising capital and you need $1 million. If you have 10 people that are going to give you 100,000, then maybe you're going to give them a certain split. But if one guy comes to you and says, I'll give you the whole $1 million, but I need a little bit better deal, are you probably going to take it? Yeah. Absolutely, because your job just got significantly easier. Now you got one person to work with, all that kind of stuff, right? It significantly simplifies it for you as the business owner. And so operators, in private alternatives, they're the same way. They'd rather have one point person to communicate with. They'd rather get larger swaths of capital at a time because raising capital, while you're also an operator running this thing full time, it's a job, it's work. It takes a lot of effort, and it's better to raise it $1 million at a time or $10 million at a time than it is to raise it 50,000 or 100,000 at a time. And so there's a lot of good ways to capitalize on the silver tsunami. Baby boomers that are retiring, tons of them every single day. The data's all over the place. The stats are all over the place, but it's about $15 trillion of money that's transferring hands over the next decade. And that money's going to have somewhere to land. And so you can either go buy their business, which is a smart play that is kind of getting to a point of oversaturation because so many people are trying to do it. I'm not saying the opportunity is not there. I'm not knocking people who are doing that. I think it's a good strategy. But if you want to get into a more niche space to capitalize on the wealth transfer, then I think private fund management is absolutely a phenomenal play. And we're seeing a lot of people be successful at it inside of our Multiplier University community. And so if you're interested in learning more about Multiplier U, you want to jump into the community for free for 7 days and just check it out and see what we're all about. Go to multiplieru.com/free trial. We'll give you 7 days for free as an Own the Exit follower. And I'll look forward to connecting with you one-on-one once you get in. If you decide to stick around, it's literally right now just $97 a month to be in the community. It's insanely valuable. I'm not going to take time to build it up right now or sell it to you, but if this is something that interests you, you want to learn more, just go to multiplieru.com/free trial. You can read about the program. You can sign up for free for 7 days. Get in the community, jump on one of our coaching calls, jump into some of our courses, see the value that we're creating, helping people be able to capitalize on this $15 trillion wealth transfer. That's all I got for you today. Aaron, you got any closing words for us, man? Awesome.
No, jump in, check it out, multiplieru.com, and see you guys next time.
All right. Thanks.